Hi, I'm Ava, local realtor in San Jose, California. Welcome to my channel. Do you own a home? Have you been thinking about selling, but you are not sure about all the selling expenses? What about tax? Do you need to write Uncle Sam a big fat check? How much do you get to keep after all the fees and the tax? Let me break it down to you. Assuming you bought a single-family home here 5 years ago for $700,000 and now you want to sell, maybe your family needs more space, need an upgrade, or moving to Lake Tahoe, why not? So you put your house on the market on February 24th, 2022, and by March 1st, you are in contract for an offer at $1.5 million, and then the house will close on March 31st. Your agent will send you a report very similar to this one from the escrow title company showing you all the total fees on your side and how much you can net. In this report, we are looking at 3 columns. The first column showing all the line items. Second column showing all the expenses on seller's side. And then the last column showing all the credits. You subtract all the expenses from the third column to determine how much you can net from the sale. Most of the fees are standard and fixed. We have fixed regulatory fees like Santa Clara County transfer tax, which is usually paid by the sellers. For San Jose, we also have a city transfer tax. It's usually 50-50 split between the sellers and buyer. For the escrow and the title fees, is charged by the escrow and the title company and is charged based on a standard fee schedule. And some of the fees are negotiable, like the agent's commission prior to the sale. So now we know the types of fees the sellers need to pay. Let's see how much the sellers can net. We are selling this house at $1.5 million, and you already paid the property tax covering March 31st to June 30, 2022, as we pay biannually here in San Jose. So that extra 1.25% property tax you paid will be credited back to you. So the total comes at $1.5 million, $4,720 for the sellers. On the debit side, the seller's outstanding mortgage on the house is $500,000, and the last month's interest on the mortgage is also included, which is around $1,100. The sellers also need to pay that back to the mortgage lender. All those fees we talked about previously also need to be deducted from the sales price. So the total debit is $586,006. The difference between these 2 columns is how much the seller can net from the sale. So how much tax do we owe on the sale of this home? We start with the sales price of $1.5 million, and we need to calculate the tax basis. As we mentioned before, we bought it 5 years ago at $700,000, and we spent, say, $50,000 on home remodeling. We put in a new kitchen, new bathrooms. So our total tax basis is $750,000 here. We also need to subtract the selling expenses we saw previously from the home sale. So for a total of $85,886, we subtract the total tax basis and the selling fees from the sales price to get the total capital gain base, which is $64,114. And remember, The sellers are a married couple who have been living in this house as their primary residence more than 2 years, so they are qualified for the $500,000 IRS capital gain exemption. Internal Revenue Services, or IRS, U.S. tax authority, has certain tax exemptions for the sale of your home if you meet their conditions. Here are the conditions. The first $500,000 will be exempt from the total capital gain. Anything after that will be taxed at 15% at long-term capital gain tax rate. That means the first $500,000 of the $664,000 are tax-free, so they are paying 15% tax on the remainder $164,000. At the end of the day, the total tax of this $1.5 million home sale is only $24,617, or less than 2%. Not bad. I hope you find this video helpful and you are no longer concerned about the fees and the tax. If you are thinking about selling, the best place to begin with is to know the current market value of your house. Click on the link below to get a free valuation report. If you have any questions, please also feel free to contact me. Thanks for watching.